Welcome to this YouTube channel of K-Leaders. I'm Francis Chen. In this episode, I would like to share with you about capital restructuring. To begin with, I would like to share with you an outline about the capital structure of a Hong Kong private limited company. In the past, we have authorized share capital and par value of shares. But things have changed effective the 3rd of March 2014 when the new company's ordinance come into effect. From that day onwards, these two concepts have abolished. The ordinance also provide automatic provision for consolidating the share premium into pay-up share capital. Although 7 years have passed, I still heard from a client the term of share premium. And I also noticed from some of the audit accounts that the amount consolidated from share premium into pay-up share capital are not properly recorded, or these amounts are inconsistent with the amount reported in the annual return as filed with the company registry. If you are not sure, please double check whether your consolidated share premium has been recorded properly in the accounting records and in the public records of the company. Some clients will come to me and ask, Francis, is there any minimum capital requirements for Hong Kong companies? I will tell you that for Hong Kong private limited company, there is no minimum capital requirements. But at least one ordinary shares must be issued, and the value of that share must be more than zero. And Hong Kong does not allow bearer shares. Share capital of a Hong Kong private limited company can consist of different classes, and at least one class of these shares must be ordinary shares. And value of shares can be in any currency. If the Articles of Association of the company allows, the company can issue partly paid shares. But share certificate will be issued when the share is paid. So once you have your capital structure upon incorporation, you can alter that structure anytime by passing resolutions of members. Of course, there is reporting requirement with the company registry. So why you want to restructure your capital? There are a number of reasons. This may include you want to admit new third-party shareholder into the company. You want to have more equity for company development. You want to capitalize your liability. You want to offer your shares to your employee by offering a share option scheme. You want to obtain bank loan, or you want to eliminate your excess capital. With your reasons, then how to achieve it? Section 170 of the company ordinance do allow some ways for you to consider, and this includes increase of share capital by or without allotment new shares. You can capitalize your profits with or without issue of new shares. You can offer in-specie dividend payments to your shareholders by issuing bonus shares with or without increase in share capital. You can convert your shares in whole or in part into larger or smaller number of shares. You may want to cancel shares which have not yet been taken or agreed to be taken by any person or have been forfeited by the company. When we talk about conversion of shares into larger or smaller number of shares, we may use the term of subdivision or consolidation of shares. Let's take an example. If your share capital is $100,000 Hong Kong divided into 10,000 shares. If you want to subdivide your shares, your number of shares in issue may be increased from 10,000 shares into, say, 100,000 shares. If you want to consolidate your shares, the number of shares in issue may be reduced from 10,000 to, say, 1,000 shares. There are a number of reasons that you want to restructure your capital, and there are ways offered by Section 170 for you to do so. And in the next episode, I will share with you the other forms of alteration of share capital. So please stay with us and see you next time. Bye-bye. Thank you for watching this video. If you like it, please give us a like and subscribe and share with your friends. Look forward to your continued support. See you next time. Bye-bye.